Alright, for this video I want to go over a sample form 4797, the sale of business property. And this is going to be for the 2023 tax year, and it is being included with a Form 1120S filing for a Florida S Corporation. So in this scenario, we want to look at how to record the sale of business assets where the date the asset was purchased and placed into service is the same year you sold it. So we've got the 4797 here. We just have page 1 of the 4797. So we don't have the second page, which includes parts 3 and 4, because we're not going to need them. So I've got the full 1120S here. So we'll go through all the forms and schedules that are going to be required. And then lastly, I've got one slide here, just very briefly covering some of the information that's going to apply here, and then the details on the fact pattern. So the 4797, we use this to record gain or loss on the sale of property used in a trade or business, and that's depreciable property, generally speaking, right? So if you are a manufacturing business and you buy a piece of machinery or equipment, you capitalize it, you depreciate it. If you sell it, the sale goes on the 4797. Now in 4797 Part 2, which is what we're going to look at, this applies to ordinary gains or losses on property that you held less than 1 year and sold it. So think of it as a short-term holding period. Now, what's unique about this example is the lack of depreciation that's going to apply. So generally, you can depreciate business use property, but there are rules for accepted property that cannot be depreciated. And one type of accepted property is property that was placed into service and sold in the same tax year. All right, and so that's what we're going to have here. So if we look at our fact pattern, we've got a lawn care business here that in April 2023, they bought a flatbed trailer and they paid $3,950 for it, and it's being used 100% for business. Now, internally, they're looking at this as a business use asset, so they capitalize it, they start to depreciate it for book purposes, and they also anticipate that, well, at the end of the year, we're going to claim the 179 deduction, right? We're going to write this whole thing off. However, when they get to October, they decide, well, this trailer actually isn't big enough, so we have to sell it. So they bought it for $39.50, they sold it for $3,275. So they had a book loss and a tax loss of $675. And this is without considering any kind of depreciation. So we're not factoring in depreciation now. We're simply looking at, okay, we bought it for $39.50, we sold it for $32.75, and so our net loss here is going to be $675. Now, because this property was placed into service and sold in the same year, you don't bother doing any depreciation expense on the tax return. So if we look at the tax return here and the 4562, we're not going to be including any depreciation expense for this property. Even though we did hold it for a couple of months, we don't have any maker's depreciation for this property. Right, so we're not claiming makers, we're not doing bonus, we're not doing 179. We're not allowed to depreciate it at all because we bought and sold it within the same year. So if we look at the 4797 here, this disposition would be recorded in Part 2. So we have name of the property, so it's a flatbed trailer, purchased on April 19th, 2023, sold October 5th, so under a year. And the gross sale price was $3,275, and the cost basis was $3,950. So our net loss on the sale is $675. Now, what's really important to highlight here is it's not so much that it was a short-term holding period, which is why we can't depreciate it. It's because it was all bought and sold within the same year. So, for example, let's say that they bought this at the end of 2022. So let's say December 2022, and they sold it in January 2023. Well, that's only a 2-month holding period, right? But they still would have been able to depreciate something in 2022 because it hadn't been bought and sold within the same year. This type of scenario only happens where you cannot depreciate it because you bought and sold it within the same tax year. If you have short-term holding period but it overlaps tax years, you would still have some depreciation expense. But in this case, we don't, because it happened all within 2023. So once we have the net loss of $675, this is an ordinary loss, so it is just included with ordinary income of the S corporation. So if we look at Form 1120S, page 1, in page 1, line 4, we have net gain or loss from the 4797, line 17, and we have the minus $675 for the loss. So the amount of loss on the sale of this property is included in line 1 income. There's no depreciation expense that's being applied at all on this asset during the year, and this isn't a separately stated asset either. A separately stated K1 item. So if we were to look at the Schedule K for the S corporation, the loss on the sale is just included in this number, right? So it's not as if it's separately stated as Section 179 deduction, right, or any kind of 1231 losses. Nothing is being reported here for the sale of this asset because none of those rules apply. And then again, just to reiterate here, nothing is being depreciated on the 4562. So you don't add it to the depreciation schedule. I suppose you could if you wanted to for internal records, but there's no special depreciation being computed. In Part 3, there's no maker's depreciation. Even though this would otherwise be, let's say, a 5-year piece of property, it's not as if you're recording the basis and the recovery period and anything here, calculating the depreciation and the recapturing it. None of that would apply. All right. So I hope that was helpful. That covers it for this tutorial. If you have any questions, obviously feel free to leave a comment or question below. And I look forward to seeing you again on the next video. Now, as a reminder, we do have a lot of other videos covering how to complete 4797 parts 1, 2, and 3. If you actually do have those types of assets that are sold in the course of your business. And so in this case, we have accepted property because it was all bought and sold within the same year. But if you did have property that was short-term property and overlapped tax years, you would have some depreciation. If this property was sold as a gain and it was held for longer than a year, you would have to complete the 4797 Part 3. And then also in certain circumstances, we would have something listed in Part 1 or maybe some 1231 recapture. But I'll put all the links below for some of those other 4797 videos, so go check those out. And as always, I appreciate you watching, and I look forward to seeing you on the next one. Thank you.